Welcome to Golden Roll Radio. This week, we're going to talk about metals, the dollar, euro, and the Federal Reserve. But first, we want to mention the conferences that are quickly approaching here in November. We're going to be in a handful of different cities, and you can go to McAlvanyICA.com/briefing. You can learn more about the locations, dates, and RSVP from the website. We also do consultations at these events, and you can sit down with David McAlvany, Don McAlvany, or one of the advisors here at ICA. Those book quickly. So if you want to sit down with us in one of those locations, please call us.
I can't stress the significance of this enough. We did a summer round. You've got to hear Don and David McAlvany together. Don hasn't done this in over a decade. And so take this opportunity to really hear the truth coming from Don McAlvany.
So let's move into the metals.
So as usual, the best way to navigate a heavily manipulated market is through technical analysis. So we're going to first take a look at gold here. We've had a couple prices on the gold chart. 1263 is our first Fibonacci stopping point, and we're just about $10 above that right now. So I would expect to see gold drop another $8, $10, $12 here over the next week. If we push through that, the number we're all hoping for down around 1212, 1213 will provide us probably the best back step into the 1200s before we see that. What I think we could be above 1400 before the end of the year.
So Miles, elaborate on your manipulated markets comment. Sorry, you caught me off guard.
I know a lot of people are always asking, how do you navigate using numbers when you have no control over the numbers? The Fed does. When you have the plunge protection team, when you have inflation, when you have manipulation taking place in the futures and options contracts, in the ETFs, how can you take something as solid as technical analysis and lay it over top of such heavy manipulation in all markets, especially in the currencies, especially in the metals, even in the stock market as well nowadays? You know, and my response to that has always been technical analysis doesn't dictate the direction of trend. It just gives you entry and exit points within the confines of the trend. I personally believe that markets are natural things that are going to tend towards what they would have done anyway, and all manipulation in those markets do is cause those events to take place either a little faster or a little slower than they would have otherwise.
And technical analysis and the patterns that are created through technical analysis is all about probability. It doesn't have to go to a certain number. It doesn't have to do this. And by picking a number, yes, you could be wrong. You know, you could pick 1263, 1212, you could be wrong. It could stop at 1267. But that is the technical analysis that is built into a pattern. And so those are just markers that you can identify as probabilities.
And to that point, I mean, on this show, you guys have been saying the probability is that we were going to come down to the 1263, having passed through the 1295 level. And so that probability has played out over and over again on this show. It's not what we wish to see happen, and we're not trying to predict timing. It's just probability.
As helpful as technicals are to narrow down the probabilities of how things are going to happen, the reality is the fundamentals and the trends within markets as they play out over time is what really matters in the long run.
That's right. And thanks for that, because let's talk about just briefly, I want to fly by some fundamentals. A push towards cashless, bank bail-ins, no return on your dollar in the bank. You're not getting any interest. Inflation, suspect retirement. All of these things are reasons that you should absolutely be concerned about your own portfolio and what role metals play. So you want fundamentals versus technicals? If you're going to pay attention to the fundamentals, then it's incredible to me that you still have people on the sidelines of the metals markets.
One fundamental that I think is a new fundamental that is out there that is a threat to all of us is cyber warfare. And I feel like people are complacent to have money sitting in a bank because the bank's computer has to be able to turn on to tell you how much money you have. If there comes a time where a bank, large, small, gets attacked through their computer system and they can't turn on their computer to tell you how much money you have, you don't have any money. So what would be the step there?
So it's not just the technicals and the price itself that can be manipulated, but all of these fundamental things are manipulated as well. The underlying interest rates, the inflation rate that Tori mentioned, political, economic, military, all of these things are forms of manipulation that we see play out.
Cost of living adjustments.
Cost of living adjustments, exactly. Catalonia votes.
What cost of living adjustment on Social Security, Tori?
It's something you have to go into the archives and look in U.S. history. It's something that used to take place.
What cost of living adjustment for minimum wage paid employees? How do they keep up? All of these things are manipulated on a Washington, D.C. level. So it's not just the price. Everything's manipulated. So to say that you can't take a type of science or a scientific approach to the math behind how markets move because of manipulation, you're keeping the idea of manipulation and the definition of manipulation way too small. It's a lot bigger than that.
No, that's right. And it's their primary motivation is manipulation of the mindset. Do not allow them to manipulate what you know to be true and right for your portfolio.
Okay, take a deep breath after that conversation. Let's move on to silver.
Silver also still trailing down. We have a 618 fib at around 1632, which was a previous stepping up point back in kind of the beginning of August this year. So I'd expect also silver to continue trailing down here a little bit before we see it make its next decision in the low 16s if we're going to push down a little bit more or not.
What we've been seeing too is when gold retraces, silver retraces disproportionately more. So keep your eye on that too. Don't assume that the ratio is going to stay the same in this declining market.
And the same thing will be true to the upside eventually with silver outperforming gold.
Which is why we keep pushing silver pretty hard right now.
White metals in general. Platinum and palladium hitting parity this week. Pretty exciting.
Beyond parity.
Beyond parity.
Palladium's more expensive than platinum. I think that's only ever happened one other time, if I'm not mistaken.
Yep, almost 20 years ago.
The markets have a sense of humor, don't they?
Yeah, so they do, and take advantage of the opportunity here. Again, one other time in history, what tends to happen is that platinum will go to 4 times palladium. That's repeated. That's not a one-time event in history. That's something that we monitor. So keep your eye on the opportunity right now for platinum and don't wait.
And that would be a 300% change from where we are in the ratio.
And I don't know how many more times we can say this. If you're a metals buyer or if you've never been a metals buyer before and you're looking for something to dive into for the first time ever, if you don't own platinum now, I don't understand why not. And if you're not adding to your position in platinum right now, I just don't get it why you're not doing that, given the way the ratio parity has worked over the last 30, 40, 50 years.
Time is now, and just give us a call and we'll explain why. We'd love to walk you through.
One thing I want to point out with that is that when we say buy platinum, we're not talking about the platinum ETF or any of the platinum group metal ETFs. We're talking about physical platinum. And here's why. If you sit with platinum and platinum does nothing in price, your ETF position is going to do nothing in price. It may even actually trend lower because of the cost of the ETF running it. If that happens and platinum goes nowhere, palladium could come down to what, $250 an ounce?
Right.
That's the opportunity we're talking about. We're not talking about price performance alone. Go buy a platinum related ETF and watch the price go up to 2,500. We're talking about the difference between platinum and palladium, physical platinum and palladium. And it doesn't have to be that platinum price has to go up for you to get the 4-to-1 ratio we're talking about. Palladium could come crashing back down to the 200s. I think I even saw it in the last 10 years under 200. So if it does that, that's when you would trade an ounce of platinum, maybe even for a loss of where you bought it at around 1,000 today. You would trade that platinum into 4 ounces of palladium when that ratio occurs. We don't have to see rising prices for that to happen. That's the opportunity we're talking about. We're not talking about platinum price itself.
In fact, the best opportunities in swap ratios occur when you actually lose money on the thing you're coming out of. And it doesn't happen often, but over the last 15 years, especially gold silver, we've had about 7.5 round trips in and out of gold and silver back and forth. And I think 2 of those 7 round trips, you actually could take a loss and increase your ounce position at the same time. So you have a tax write-off and an increase in ounces at the same time. And if you're not working with somebody who understands this and has the history in the metals market to go through how these metals have operated back and forth against each other, you're missing opportunity there as well.
Yeah, that's what we do.
Well done. I think that was a good conversation on both of those topics. So let's move on to the dollar and how the dollar's playing into our hand of a little bit of a bullish bounce in the same long-term downward bearish trend that it's in. It's on a water slide like we've talked about in the past. The euro is trading off of that 1.2 marker, and that's giving a boost to the dollar index because it's so heavily weighted in the dollar index.
Yeah, and Robert's point on the euro, this week we've had the Catalonia vote in Spain, which a lot of people are blaming the fall in the euro on that right now. I think that's a much bigger deal what's going on in Spain right now. But, the euro turned down off those levels, again, technical levels that we looked at a week or two ago. And the dollar turned up on technical levels. So actually what I'm going to be looking at is for a reversal of that coming here in the next couple weeks, and it may be worth looking at a dollar short and a euro long position.
Yeah, the Catalonia thing, think about that, you guys. That's a modern day revolution. That's something that's actually fascinating to watch right now. And if you want to talk about Revolution 2, let's see what happens if the United States allows Puerto Rico to default on all of their $72 billion in debt.
I think this one event here in Catalonia is going to catch fire. I don't know how well it'll catch fire throughout the European Union, but there's bound to be another group of people who want the same thing in their area.
Well, and just play out the European Union over the last 5 years. Switzerland, who is never part of the euro, depegging anyway. We've had Italy, we've had Cyprus, we've had Britain, now we have Spain.
Yeah, you mentioned Britain. The pound could be due for getting hammered. Actually, I've seen some articles about that coming from the UK. As they work through their independence, it's going to be interesting to watch.
There's a lot of instability, uncertainty around the world. North Korea, the political issues in Europe, the political, social issues here in the United States. The Dow Jones keeps going up, but everything else looks normal with the dollar coming down. Dollar coming down, gold is rising in the long run. The only thing that doesn't make sense is the Dow Jones is still going up and they're keeping interest rates down, but that's the manipulation conversation we had earlier.
Meanwhile, the race for the Federal Reserve chairman spot heats up.
Wow, you guys, honestly, this is of major significance to me. Kevin Warsh and Jerome Powell are two of the finalists right now. We don't even know if Janet Yellen's on her way out for sure. It's looking more and more that way, but just watching who they're interviewing and who is supporting each of these final candidates, in a sense, to me, they couldn't be more different. And as far as Jerome Powell goes, if he ends up being the one selected, we've reached the point of no return. Look, Powell was appointed as a central bank governor by Barack Obama in 2012, and he's not nearly as hawkish as other candidates on President Trump's short list to preside over the Fed. And if we go that route, then I'm going to know at that point that the establishment is absolutely winning the game.
If we go the route with Powell.
Yes.
Yeah, Powell's a Keynesian, right?
Yeah, he is. And he was a former Carlyle partner. And it's just going to be more of the same, maybe worse.
So uncertainty, a Keynesian entering the Federal Reserve, and all the risk that's out there fundamentally. Gold thrives on uncertainty. Gold thrives on money printing. Gold's going to thrive.
So that's it this week. As always, we thank you guys for stopping by. If you like what you heard, hit that subscribe button, give us a thumbs up. Definitely engage in the comments down below. Let us know what you're thinking. Ask us any questions. We're happy to answer questions on the show as well. Definitely head over to McAlvanyICA.com/briefing. Check out the cities that we'll be stopping by in November and early December, and come out and see us if you can.
Thanks for listening. Have a great week.